Hello and good morning. I'm Edgar Katashabe. This is Traders Next Door, and you're about to hear the Daily Scoop. So there has been a lot happening in the last couple days, with Donald Trump being newly re-elected to the White House, the Fed announcing a 25 basis point rate cut, NAS and US 30 at all-time highs, gold plummeting through the floor. It has been a very eventful couple days. So let's break down what's happening and what you can potentially expect in the days and weeks leading forward. So starting with market sentiment. Trump's re-election back into the White House has seen rallies in stocks and indices, and this is due to expectations of more fiscal stimulus. With a Republican Congress, a Republican-led Congress, traders are betting on policies that are going to tend towards more government spending, particularly in industries like the military, infrastructure, and energy. So investors often adjust their policies based on the anticipated government spending. So if we see larger budgets for these industries, namely the military and infrastructure development projects, companies in those sectors are going to benefit massively, and this is going to drive stock prices up. Simultaneously, there's been a wave of optimism going through the markets, and this has triggered a more risk-on sentiment with investors and traders. And this also leads to more of these indices driving up their prices as well. So with Trump back into the White House, as we said earlier in previous episodes, that this is going to be very bullish for the dollar, both in the short term and likely in the long term because of Trump's policies. With his proposed tariffs on countries like China, with his America First policies, this is going to drive up the US dollar quite a bit. So it's going to be very interesting to see when he actually takes office, how many of these policies he's actually going to enforce and how soon is he going to implement them. Switching over to the Fed, which is the other half of this coin, they introduced a 25 basis point rate cut yesterday, and this was largely expected. It seems like they're going according to plan from what they had planned earlier, but there was some shift in the language that they were using on the day. Now, it's very interesting that they decided to go ahead with this basis point cut, given the GDP growth and the low unemployment that we've had leading up to it. But this cut could stimulate more borrowing from the market, and this will further fuel the economy. However, it's a very delicate balance between the two. Too much spending could lead to a little bit of overheating, which especially if inflation starts to trickle up. So the Fed is going to be very cautious about what they're going to do and how they're going to do it. They were very deliberate in their wording yesterday, avoiding language that predicts too far into the future. They're really going to look at when Trump moves back into the office, what he's going to do, how the economy is going to react, and then what cards they are going to play. So it's going to be very interesting what's going to happen in the next given weeks. And in terms of monetary policy, which is going to shake up a little bit with Trump in office, the Fed's decision is going to be very significant. They're trying to support economic growth without letting inflation come back into the equation. And with these new fiscal policies on the horizon, the Fed may need to rethink their approach entirely. So it's going to be a very uneasy time for the Fed. We're not going to know what they're going to do too far ahead of time. We're going to have to watch the data and watch how things play out. Moving over to the global stage, with Trump's re-election and the Fed's decision combined, this is going to have an impact on the global markets as well. A stronger dollar can cause stress in emerging markets, especially those who depend on exports. So with the advent of these two decisions coming in, especially if those decisions lead to rise in the US yields, often there's a flight to more safer bets as traders and investors go from riskier commodities and currencies like the yen, the euro, and flock towards the dollar for safety. So those currencies are going to see somewhat of a hit both in the short to medium term. So it's going to be very interesting to see how the global markets respond to these changes and what they're going to do to bolster their own currencies. So it has been a very interesting week. We have CPI coming in next week, which is going to have its own set of data, its own set of variables that are going to be introduced. It is unlikely to be massively important, or at least not as important as it has been traditionally in the past. But if the CPI data does surprise and is way off from expectations, this will introduce a new interesting variable into the mix that might play a role in what the Fed is going to do long term. So really interesting time to be a trader. It is going to be a really good time to get involved and try and make most of the opportunities that are being presented in the markets right now. Gold fell through the floor not too long ago. NAS US 30 rising up. If you missed those moves, don't fret. There's going to be plenty of moves to happen in the future. And if you want to take advantage of that, you can join Vault Funder, purchase a Vault Funder challenge, and get trading. It is going to be a very interesting time in the markets. Speaking of Vault Funder's The Ultimate Trader started on Monday, and we have the latest stats as of yesterday, 5 o'clock, of who is in the lead. Our top three should be on the screen right now. We have Kevin in first place with a 14.5% gain. He did this over a couple of trades, the biggest one being a gold short. So he managed to catch the bulk of that short on gold that happened 2 days ago. So Kevin, well into the lead. In only the first week, has gone a 14% gain. He would be wise to be very risk off right now to really solidify his chances of winning that PS5 at the end of the competition. We have Armand and Clinton in second and third place. They with a 2.86 and a 2.78% gain respectively. Very respectable in the first week of the competition. There's still a lot of traders on their heels, nipping at their buds to get ahead. So the trading is going to be very interesting moving forward. It seems like the top three is dominated by gold and US 30 traders, which makes sense given how much movement those two pairs have had in the last couple days. So it's going to be very interesting to see if with gold and US 30s more ranging market conditions yesterday, how these traders are going to adjust to market changes. There is still 10 slots available to enter the Ultimate Trader. You've only missed the first week. There's still 5 more weeks to go. So if you would like to enter, you can go ahead and purchase a Vault Funder account using code TUT. Get 30% off your account and join the Ultimate Trader. We have 5 weeks of trading left. It is going to be a fight to see who is going to be the Ultimate Trader. I've been Ed Katashabe. This has been Traders Next Door. You have just heard the Daily Scoop, and I will see you next week.